where I need to disconnect one recording and start the other. So what we're going to do now is we've got Jim Grant with us. Jim, you can pop on your screen or share your screen anytime. Jim's with Storage Protectors. He's been in the self-storage industry for about ever. Jim's well known throughout the industry. He's a pretty in-depth guy, understands the industry from an operator standpoint as well. He's going to take some time today to share some information with us that to find extra revenue stream inside your facility by talking about content insurance. So Jim, are you there? You can take it away.
Okay, I think I should be on here. Hold on.
You are. Go ahead.
Okay, we can see everything. Thank you, everybody, for joining us today.
If you got a presentation, you probably need to share your screen at the bottom, that little green button, Jim.
Oh, I do have it on share. How's that?
And if you've got some, there you go. I think, yeah, I see it.
Okay. Sorry about that. Technical difficulties here. Anyway, thank you very much, Steve, for that great introduction. As Steve said, I've been in the storage business now since '94, developing facilities, building them, running them, managing them, and creating different companies that are instrumental to the self-storage industry, online auctions, and insurance companies. So storage has been my life, and one of the things we decided to do a while back was we decided to start our own insurance company that would help operators, working from an operator's point of view, basically. We thought that there were a couple of holes in the way the self-storage industry was looking at insurance. One of the main ones was that a lot of people weren't offering it for portable storage, which was a growing business. So we went with, we started our own insurance company called Storage Protectors. We offer insurance, but we try to pay a majority of the money that is collected to the facility owners themselves to help increase their revenue stream. We cover all the expenses. There's lots of great companies out there selling insurance. I don't want to say that this is the only one out there by far, but there's a lot of great ones out there, but this one I think gives the most back to the clients and has the best policies that are available. So we're an international company. We offer insurance throughout the U.S., obviously, Canada, United Kingdom, Australia, New Zealand. We do both portable storage and stationary storage, both of it. We're an AM Best A-rated company. We're underwritten by Great Lakes Insurance and Munich Re, which are about a $10 billion company. We cover everything on the inside of the containers or the storage units, whether it be personal contents or business contents. If it's a portable storage, we cover it while it's in transit, while it's at the location or while it's at their location. And we also cover the container itself. More and more people we find are moving over and carrying both products, both the white box business and the regular storage business, to try to pick up both client bases. Some of the stuff we cover, which is obviously, if you don't offer tenant insurance yet, you'll realize that it's a great moneymaker for you, but it also covers and eliminates a lot of liability. So we cover burglaries. So if someone had broken into a storage unit, we would cover the contents of that. Water damage could be from water runoff running into a unit. It could be from a fire, a sprinkler head, breaking off and leaking. It could be from a roof leaking. Fire and smoke, it happens a lot. Unfortunately, a facility catches on fire, the person's contents are damaged considerably or get smoke. Vandalism, in case it gets broken into. Explosion, that's probably more for the portable storage where they rent them out for fireworks displays. Wind and hailstorms. Again, a lot of stuff might be portable storage, sinkhole collapse, falling objects. Pests and vermin. Out here in Arizona, we have a real big problem with scorpions and black widows and rattlesnakes, but in other areas, it could be something as simple as bugs getting into it and ruining somebody's product in there. We do to cover that as well. And again, like I said, we do cover the transit and property on site. Most of the larger companies out there have it mandatory that they have to take some kind of insurance when the unit is rented. When you go to public storage, you can either get your own insurance, or you can take the public storage insurance, or you can send them an insurance binder showing that your contents in there are covered, because in most people's policies, the product and the contents are not covered inside a storage unit. The nice thing about our program is that you don't need to be licensed in order to offer it, okay? We're a real insurance company, 100% insurance. It's not a reassurance company, okay? And it's not a, so the actual insurance certificate is between the insurance provider, which would be Great Lakes Insurance, and the tenant. You are not part of the coverage at all. So you're always the good guy in this. Whenever there's a claim to be put in, it's in your best interest. Obviously, you want it to get paid because you want your client to be happy, and we want them to get paid because we want you to be happy. So you're always, so there's no license required, very similar to it would be for, let's say if you went to rent a car, for instance. The person behind that desk is not actually, offering he's not licensed to sell insurance, but he's offering insurance. The other thing to remember, although we're called storage protectors, we're not a protection plan. We're actually an insurance company. So a protection plan is something a little different, which I know that some people do choose to go that route, but we're 100% real insurance. The advantage, of course, is that you get to make money off of every policy that is sold. It doesn't sound like much. And when I first started in the storage business, I kind of like discounted the fact of how much money you could make. But honestly, there's an awful lot of revenue that you can make that drops your bottom line because you have no expenses against it. Everything, the client that walks in to rent a storage unit already has to have insurance. So in that case, it's just a free money maker that drops your bottom line. We have automatic APIs to do all the reporting for you. As soon as you put it into the management software system, at the end of the month, we get that report that shows who you sold the insurance to. You collect the money when you collect the rent. So you're collecting the money up front before you pay us. And also it releases you of a lot of liability. For instance, if there's a break-in, a theft, or there's water damage, it's tough for them to come back to you for that point, because then you'll be able to say, well, either A, you have insurance already with Storage Protectors or with one of our competitors, or B, you have insurance with your own homeowner's insurance policy. One of the advantages here of taking our insurance would be the deductible is only $100 versus, let's say you take your homeowner's insurance. My homeowner's insurance policy is $10,000. I care more about, a fire at my house than my kids throwing a ball through the window. So I keep a high deductible in mine. In this case, this is only a $100 deductible. Also, because it's a supplemental policy, it does not go against your homeowner's insurance policy if you put a claim in. On average, it's about a 17% increase over 7 years if you in turn put in a claim on your homeowner's insurance policy. This being supplemental, you wouldn't have that additional charge on your homeowner's insurance policy. Like I said, the nice thing about it, you get to grow your revenue. You're offering a great service to your customers who already have to have this service. There's no additional infrastructure costs or overhead. We cover giving you free brochures. We cover setting you up. We take care of the APIs. If you're with SiteLink, we pay for the additional fees with SiteLink. You collect the administration fee right up front. So you're going to collect the full premium, and there's no licensing or costs required. So this is kind of the meat and potatoes here for the content insurance. You can see that the average coverage, believe it or not, is $5,000. If you were to sell a $5,000 policy, your wholesale cost would be just under $11. You'd be selling that for about $22. So you're making about $11, okay, on that one policy that you sold. Obviously, if you take $11 times the number of units you have, let's just say you had 300 units, about 75% of your people will take the insurance. So if you had 400 units, it'd be about $3,600 a month, or So it adds up, it adds up to consider almost $40,000 a year in additional profit because there are no charges and expenses against that. This slide just shows if you did have a portable storage, you would also be selling a second policy where this covers the container itself. We cover the whole cost of the container up to $3,500. Again, your cost is $4.50. Our portable storage people sell it for $12. They make $7.50 a piece. So if you sell both of them, you're making somewhere in the $10, $11 per policy. This slide, it's a simple application process. We take this and we'll implement it into your current management software. For instance, if you have SiteLink, we would put this into your SiteLink. It's part of the normal process when someone comes in and rents a storage unit for me in my storage facilities. They come in, we get the name, the address, the information, contact information, obviously. And the next question is, how much coverage do you want? We put the coverage on right away and tell the people that if you don't want it, just email me or fax me a copy of their insurance binder from their insurance company showing they have insurance, and I'll take it off. Again, 75% of the people will not do that. For $12, it's just as easy for them to keep that on the policy. Again, if it's a $5,000 policy, it'd be $21. At the end of the month, we're going to get a report like this that'll come out of your management software. It's going to show the location of your unit, the unit number, your transaction date, whether or not the person paid you. So if they came in, they rented a unit and their credit card didn't go through in the second or third month, you're not going to be charged insurance because obviously you didn't collect any money for them. The contact's name so we can send them the insurance binder, a certificate, when it started, the period that it covered, and how much coverage they took. And then lastly is how much you charge them. We take this and then you'll receive about the 5th of the month an invoice coming back to us for the difference between what you sold it for and what the wholesale cost was. When claims come in, obviously, like I said, you don't deal with claims at all. You're always the good guy. So if a claim came in and somebody told you, I opened up my storage unit and I had some mice in it and they destroyed my couch, they can do a couple of things. They can go online and fill out a claim form. They can email it to us. They can fax it to us. It's an 800 number they can call. All you need to do is tell them, it's on the brochures you have, this is how you put in a claim. You don't have to deal with the claims at all. You just pass it off onto Synergy Claim Adjusting, and they'll come out and take a look at it and settle the claim. And I guess I'm really early, so hopefully there's a lot of questions here. Again, it's a very easy program to get involved in. It's a great way to limit your liability. It's also a great way to have the possibility of making additional income. Do I have any questions at all?
So anybody that has any questions, if you could just go ahead and type them into the box, the question and answer button at the bottom of your screen, we can get them answered. I've got a couple that I can throw out at you, Jim, just for, because some people may have this on your mind. So you did mention a little bit of a difference between actual insurance and a protection type of coverage. Why don't you go a little bit more into depth on that, just so the folks understand the differences between the two? Okay.
A protection plan is something that is out there currently. And in some cases, it's questionable whether or not it's 100% legal in some states. There are some lawsuits out there currently claiming that the protection plans are not totally legal. What a protection plan would be you would take an insurance policy yourself on your whole property, and then you in turn would offer it to the to your tenant that comes in, and basically it's under your master program. In our case, so in that case, the insurance is actually between the operator and the insurance company, and you're acting as basically as the insurance agent in taking care of that. In our case, ours is actually an insurance agreement between Great Lakes and Munich RE and the actual end tenant. So the insurance certificate that they receive comes from Munich RE and Great Lakes, who are underwriting our program. So the insurance, so again, takes you out of the loop. versus being in the middle of it. I did it that way because I don't want to ever be the bad guy. I hated being the person that came in, that when a tenant came in and claimed that they had mice in their unit and there was damage to the couch, or they had bed bugs that spread from one unit to the other unit, for instance, or there was a water leakage that had seeped in. I hated being the one that had to be the one to tell them that either they weren't covered or it wasn't going to be covered. I wanted something to be absolutely sure that somebody in turn was going to try to, cover that.
Okay, great. Great. So we are getting some questions here. And just before I shoot the next question to you, Jim, just want to let the audience know that in between, at the end of this presentation and before Tron comes on, we're going to give away a random $100 gift card to somebody. I don't know who somebody is, but we'll get to that in a minute. Okay, so stick around for that. Question for you, Jim. We've got them flying in here now. We've got one from Belinda who asks, is there a form to waive any insurance?
Yeah, so again, we have it 3 different ways. When you come in, there are 3 choices you can have. You can either, 1, take our insurance program, or 2, you can take give the facility an insurance binder from their own insurance company, or 3, they can sign and say, okay, we're going to self-insure this, and we understand we're going to alleviate the storage facility of any kind of damage at all to my unit, and I'm accepting a 100% responsibility. Just to clarify, I'm not an insurance agent, although I own the company. So detailed questions on insurance, I probably can't help you on, but I can answer most of the questions. But in order to make it totally really legal, is you have to give them the option. You can't force them to take your insurance. You have to give them other options. And I say that because some of the larger companies, when you go, one specific one I'll say, when you go in to rent a storage unit from them, they really try to force you to take their insurance before they tell you there are other alternatives. We're very transparent and let people know that they can self-insure it and not take any insurance, or they can get their own insurance. But they have to have something.
Okay, great. Okay, I've got a question here from Linda. What software are you compatible with? She says, web self-storage is my platform.
Okay, we do web self-storage, SiteLink, CenterShift. So most of the major ones we currently do.
Okay. Okay, next one from Belinda. If their credit card bounced, do they get a delinquency notice or your insurance is about to be canceled notice from Storage Protectors?
No. That is something that we've done at the facility itself. So the facility would send them out a late notice, that's a great question, Belinda, because it almost forces people sometimes to make the payment and the rent. The way I word it at my facilities is, your credit card did not go through, was declined. You owe us X number of rent dollars. Also, because it did not go through, your contents are now not insured because you haven't made your insurance premium. Please make this payment as soon as possible to reactivate your insurance program as well as your rent. So it kind of forces sometimes people into making their rent payment because the belongings are no longer insured.
Great. All righty. We've got another question here from Belinda again, and she's asking, is there an annual fee for management?
I think you're asking for us, the answer is no. We don't charge any fees at all. We incur all costs for the program. So we'll send you out brochures to hand to your clients. We take care of all the APIs for you. Our agreement is a 12-month agreement, basically locking you in our rates. So we're not going to give you teaser rates and increase your rates at all. You're going to be guaranteed and locked in. And there's no fee at all. You know, again, I kind of set this up as if a storage operator would want it. You know, at my facilities, you know, like most, we're month to month. If I'm not doing a good job, then you can move out of my storage facility and move into somebody else's. The same thing with our program here. If I'm not doing a good job, you should give me a 30-day notice and kick me out.
Great. So basically, if they sign up, they go through the policies and you're writing them a check on a monthly basis.
Well, they're actually collecting the money up front. So if let's say one client came in and took a $2,000 policy, I'll go back to that screen. If a client came in and took a $2,000 policy, when you charge them his rent, you would charge him that $12. At the end of the month, I'll get that report from your management software, and I'll send you back an invoice for that $6. You've already collected the $12, and then I'm going to charge you for the full $12. So you'll keep $6 that you've already collected for your administration fee, and then I'll collect $6, which covers the actual cost of the premium.
Okay, great. Okay, we got several more questions. So yeah, keep them coming in if you want, folks. We've got one here from Jolie. She's asking, is there flood coverage and then mold or mildew coverage?
Ooh, good question. I guess I should have gone with what's not covered. There's a couple things that aren't covered on our program, and flood is one of them. And let me explain, there's a difference between a flood and water damage. Floods would be obviously standing water, Florida, New Orleans, Houston, that is not covered. But water damage is covered. So if you're in, let's say you're in Boston, where obviously I'm from with this accent, if you're in Boston and the snow is melting and the water runoff is running down the parking lot and runs into an exterior unit, that would be covered. Or if a sprinkler head broke because they put a hanger on there, which they never do, of course. Tenants would never do that. That would be covered. Or if the roof leaked and you got water damage, that would be covered. But actual flooding is not covered, no.
And the second part of the question was mold or mildew.
Well, mold and mildew, I'm going to say, would not be covered under our policy. It's one of those things that you never know when that really happened. So it's part of that home same problem. The mold and mildew is not covered. No.
Okay.
Those are the two major things that are not covered in our program.
Okay, thank you. All right.
Honestly, I don't believe that they're covered in anybody's program. It's one of those things that you really cannot control.
Okay. All right, we got a question from Richard. How do you handle states that designate the facility as an insurance agent and charge for the licensing?
I'm going to have to guess. I don't know which state he's talking about specifically, Richard. However, I can say that we have over 50,000 policies throughout the U.S. and almost every state, and we have not run into that situation based on how our program is set up. Again, it's set up differently than most programs because you're not an insurance agent. You don't need the licensing specifically. For instance, in California, some people do get licensing specifically for everybody at their facility, and we don't have that. The agreement that you're selling, you're getting an administration fee to administer the program, and the actual agreement is not between you, the facility, and the tenant. The program is between the actual underwriter and the tenant. So when the tenant gets their certificate of insurance, it's actually going to be from Great Lakes and Munich RE directly to that tenant, and which kind of supersedes the person at the counter who is selling that program. He's not really selling it, of course. He's administrating it by offering it. And again, we follow the same program that the car rental companies do or the equipment rental companies do.
Okay. Next question's from Kurt. Is the commission rate paid to the storage company based on total volume of policies placed?
I don't think I understand that question.
Yeah, is the commission rate paid to the storage company based on total volume of policies placed?
Well, no, I mean, if you only had one policy, then you would get your commission on one policy, the one that you sold. If you sold 300 policies or 400 policies, it would be off that spreadsheet that I showed you. Let's see if I can find it. and it would be a total amount that you collected.
Yes, on the screen here, you're showing me what that looks
Yeah.
like.
So, Kurt, does that answer your question, I guess?
Well, we'll see if he follows up with anything here. I've got another question why we keep
Don't
going
forget,
here.
excuse me.
Okay, yeah,
Don't forget, Kurt, I'm not paying you a commission. You've already collected that money, and it's already in-house per policy per month that you sold. And then at the end of the month, I'm going to send you an invoice just for the cost of the insurance. You keep your administration fee that you've already collected.
yeah. His follow-up, he typed in, it says, my question would be for companies with multiple locations. So I guess it's just it's a multiplication deal, right? How many policies per facility times your rate times how many, how many policies you have across the board, right?
Yeah, like for instance, we do some companies, and I don't want to mention any, but say we do one large REIT, all right, and each one of their facilities is selling um, policies. I can't use really sell. Each one's are offering policies, and at that point, at the end of the month, we send corporate. The report that we get comes from corporate, which then in turn we send them their invoice, and I believe the money, the check that we receive comes from the corporate offices, although the money has been captured at the facilities.
Okay. Next question is from Beth. Our lease requires insurance coverage, and they can take what we offer, or they can provide us proof of insurance. What are your thoughts on refusing to rent to customers who have no coverage at all?
I agree with it. We have mandatory insurance, and so does Public Storage or CubeSmart or Extra Space. Most of the larger REITs, as well as most of the independents, have to have insurance of some sort in order to help reduce your liability. The only thing I would have add is that if they don't have insurance with the insurance that you offer, or give you an insurance certificate from their homeowners insurance policy, then you could also have a third option, which would be that they're agreeing to self-insure it. But we don't rent, and most people won't rent unless you have some kind of insurance or proven insurance on there. That's why when somebody comes in, we put the insurance on automatically. And then if they want to send me that in later, then of course they can send it in and they'll take it off and credit their account if they be given the insurance binder. But 75% of the people do not do that. It's such a small charge. When they look at, just take that $5,000 policy for $21 a month, and most people in their mind think they're going to use a storage unit for about 3 months. We know they keep it a lot longer, but they think $21, it's not worth calling the insurance company and getting an insurance binder sent to them, when $21, with one, it's not a lot of money, but two, it's not going to go against their insurance policy, homeowners insurance policy, and three, it's only a $100 deductible. So it's not a very big deductible versus what the homeowners insurance policy would be. So there's a lot of benefits of getting a supplemental policy. But the answer to your question is, I make it mandatory, and most people I make it mandatory. They have to have some kind of insurance and have it in the lease like that.
Okay. Okay. Question. I don't know if anybody else has any other questions out there. I've got one that somebody asked me about at one time at a show, Jim, and maybe you can. Obviously, I think you know the answer to this one, but I'll ask it anyway. It's a dumb question, but dumb questions deserve great answers. What about adjoining unit break-ins? Somebody's an adjoining unit, and somehow they manage to get through the wall, or some type of efforts to get into a unit that is not theirs, not by the front door or the garage door. Any difference, and how is that handled?
Well, that's actually pretty popular here in Phoenix, where somebody will rent a storage unit, usually an older one, but still, and they'll then take out the screws on the inside of the partition walls and go from unit to unit to unit. So when you do your, when you walk around in the morning and look at your locks, you don't see any locks cut off or missing, so you assume that everything's okay with that. In the meantime, they're pulling all the product and contents out of the adjoining units out through their unit, and all you think of is, hey, this guy's moving, a bunch of stuff out of his unit. That would be covered under burglary. That's under our policy. That absolutely would be covered.
Okay, good to know. Good to know for sure, because that question comes up a lot.
Well, I mean, yeah, honestly, that's a smart way. If you're a burglar, it's a smart way of stealing people's stuff. It's going through so that it's not on the cameras. It's not on the, especially external units or unmanned facilities. That way no one's really seeing you take anything out of the other people's units.
Okay.
And of course, if you're smart, you put the walls back up again. But
yeah, exactly. Follow-up question from Kurt. I see where he's going with this, and so he's asking the follow-up question regarding, say that an example situation, a company has possibly 30,000 policies, as opposed to a company that has only 300 policies. Is there any difference in the amount of revenue to the facility owner per policy? It's a volume question, I guess. And
there's always volume discounts, absolutely. These are our basic prices that we have across the board. We just signed up recently a 15,000 policy deal. We're doing a 75,000 policy deal. So obviously those companies would get a better pricing from us, absolutely. I'm more than happy to talk offline about that.
Yeah, and I think that's his intention. Okay. All right, we've got just a couple minutes. I don't see any more questions. I'll just ask an open-ended one for you, Jim. Is there anything that that maybe the facility owner may not really know about tenant insurance? Is there a hidden secret? Is there something, pro or con that somebody should know before making a decision?
Well, I was extremely hesitant putting insurance in. I'll be honest. I was one of those guys who said it's going to price me out of the marketplace. I can't do it. Then I looked at all my competitors in my specific areas here in Phoenix and said, wait a minute, everybody's already offering insurance. I'm the guy who's not offering it. So it doesn't really price me out of the marketplace. Second thing I looked at was the amount of income it could produce. You got to remember, there are no expenses against this, so it drops to the bottom line. And if you look at what cap rates are right now is selling for storage facilities, and let's just say, I'm going to use Phoenix again as an example, right now it's about a 5 cap out here. When I looked at the bottom line, what was increasing my revenue stream with no expenses against it, and then I looked at my 5 cap, I was like, wait a minute, I'm leaving millions of dollars on the table by not offering insurance in my facilities. Now, granted, my facilities are big. They're, I have 140,000 square foot one here. So, but it was also, for at least 2 years, I never offered insurance and walked away from all that additional revenue. And it's honestly pretty silly because my competitors were getting it. They're already offering it, making it mandatory on the leases. I looked at my lease, which obviously it was not, I didn't create my lease, but it actually said insurance was mandatory, but I was never enforcing that. So it's very easy to enforce it. The managers, if you have your managers and your counter people adhere to the policy and you police that policy, you'll see it makes a huge difference on your income stream because it's really basically free money and on your valuation increases.
Okay, great information.
And honestly, also, it reduces your liability. I mean, God forbid you have a fire in your building and somebody loses all their contents, and they don't have any insurance on that, or they're in between homes, or they're overseas and they don't own a home and they had no insurance. Well, honestly, they're going to come after you for that. Whether the lease says it or not, they're going to come after you and try to sue you. And we know how judges in the self-storage industry love to give judgments against storage facilities. So, a roof collapses because of snow on there, for instance, or ice on there, water damage, or fire or smoke. You know, we had, for an example would be, there was a fire in Houston, and 17 units got smoke damage down there. It had nothing to do with the facility. The fire was next to, in a field next to the facility. But you know, normally I would say that the tenant would come after you for that and want to get compensation for it. In this case, those units all had insurance, and they wrote a check for that to cover it.
That's great. So great information shared today, Jim. We appreciate you being here and being on
Thank you very much.
presentation. And I think anybody that needs to get a hold of Jim, you can contact him or contact us here at the Storage Group, and we'll connect you guys. Thanks again, Jim. We appreciate you.
Thank you.
Okay, so all right, like I promised, we're going to give away $100 certificate, gift card. I mean, Visa gift card. And the first winner of the day is Amanda Dice. So Amanda, congratulations. You've got $100 to spend on something. We'll follow up with you shortly. And everybody stay tuned. We're not done with that yet. We want to keep you here and keep you interested. We know that the topics we've got are powerful enough to keep you interested, but we certainly would like to kind of share the wealth with you a little bit and give you a little bit of extra spending money. All right, so let me go ahead and stop this presentation, and then we'll